All right, it's the 7th of April. It's a Monday. We've got about 25 minutes to the NY Open. Um, let's go to the charts in a second. Okay, let's start with the calendar. So this week we've got CPI. This is CPI week. We've got CPI and PPI. PPI is on Friday this week. CPI is on Thursday, and yeah, so PPI is on Friday. So Monday, Tuesday, Wednesday, there is no news. There's just news on Thursday and Friday, right? We don't have any news for the next 3 days. Just Thursday and Friday, we've got CPI and PPI. Let's go to the charts. Okay, let's go up a time frame. Let's look at what happened on the weekly, right? Now, we have a rejection. This is a liquidity grab on the weekly and a rejection. Now, I say this very often. When you're looking at different time frames, uh, look at them and do your analysis on that time frame, right? So that time frame shouldn't influence the other time frames, right? But you gather the information and then you make a decision on what you should or should not do. Okay, so just on the weekly time, this is just off the weekly time frame only, right? We are not adding any other time frames to it. On the weekly, we are rejecting 3150. That's a liquidity grab to push down. This is a massive rejection, right? Gold is too expensive at 3150, so price is now trying to push down, and we could head from here down to weekly demand, which is around 2,900, right? That's very possible. That's another about 1,600 pips away, about 1,500, yeah, about 1,500 pips away. We could be heading to 2,900 because that's where we have weekly support and also weekly demand, right? This is just off the weekly time frame. This is probably the pullback to create a top wick before we start pushing down. Now we could start pushing down. We could start pushing down today, or maybe tomorrow, Wednesday, or even on Thursday, right? But for now, price is pushing up. But on the weekly time frame, we have a clear rejection, a bearish candle form, a rejection candle, and we've rejected 3150. That's a liquidity grab from 3150 and 3135 to push price down. Okay, possibly towards weekly support. There is no bottom wick on this candle, so we could be heading towards 2900 or 2882, or even further down 2850. Right? Let's go to the daily. On the daily, we have a similar picture. We have two plus 1,000 pip candles, right? On Friday, we had a 1,200 pip candle. The previous day, we had, I think, a 1,100 pip candle. Yeah, right? So that's a lot of volume. That's a $110 change on a single day in the price of gold, and that's a $120 change in the price of gold in a single day. Okay, so price is definitely pushing down. We're bearish right now on the high time frames. On the weekly, let's look at the monthly. Yeah, the monthly is beginning to has started going bearish. There is no top wick on the previous monthly candle. We're pushing down, right? So on the daily, we're pushing down. We've closed Friday. We've closed below 3057 and 3050. Okay, and we've gone past all of this daily demand. There's daily demand here, we've gone past it. There was daily demand here, we've gone past it, and we've tapped 2979. If we get a rejection here, we could be looking at taking sells to head back to 3023 or 3000. Okay, that's on the daily. Let's go to our trading chart. Now, before we draw our zones, like we always do, let's do a quick recap of what happened on Friday. Now, there are 2 days of the month. just 2 days that I look at the 5 minute time frame. I look at 5 minute support or 5 minute resistance, right? Those happen only on 2 days. That's NFP and that's CPI, right? So on Friday we had NFP. So we took a trade when 5 minute resistance had formed, okay? So, but still it has to be at a liquidity level. It's not a random candle anywhere on the chart. It's at one of the liquidity levels, okay? Where's my, just a second. Yeah, it's always at one of these liquidity levels, okay? Um, so the 30-minute resistance had formed. This was inside pre-NY, so that was a perfect sign that price was pushing down. This was inside the pre-NY. So pre-NY on IC market starts at 1400 hours IC market server time, and this was 1430. The candle opened and it closed at 1500. So that's a perfect 30-minute resistance that we can. It's a perfect 30-minute resistance we can consider and look to use and trade from, right? So this happen if it happens outside, if it happens before 1400, I don't consider it, right? It needs to happen inside of pre-NY hours, right? So that is IC market server time 1400 hours, right? So we have 30-minute resistance formed here. Then we had news, so I looked at the 5 minute chart. This was the news candle, I think, 1530. Let's go to the 5 minute chart. Yeah, this was the news candle, 1530. And we had previously two 5 minute high breaks. Now, I say this again, this is the only time Friday, NFP and CPI are the only times I look for 5 minute structure. Only times, no other time, no other day, right? It's always I enter on a I look for 30-minute support or resistance, sometimes 15-minute if there's a strong trend up or down, and then the fib model that I use is always on the M15 time frame, except for NFP and CPI. All right. So we had a 5 minute high. This high was taken out by this high. This high was taken out by this high. So I drew the fib like that. And then price tapped 3100, clear rejection. And we entered somewhere here. And I think I got out at around, I can't remember, 200, 170, 200 pips. But price just plummeted down, right? It just went straight down another, I think that was like 1,800 pip move down, was it? Yeah, I think about an 800 pip move down. Yeah, it was 800 pip move down from 3100. Um, that was, I wasn't expecting that, but price, because the previous day we had 1,000 pip candle, I was not expecting a one more 1,000 pip candle the next day, but we pushed down 800 pips from that entry. I got out, I think, at around maybe 200 pips, so I don't know, 170 pips or whatever. And then we called it a day. Okay, so let's get rid of all of these and start our zones. Price has gone through everything. We're going to talk about what happened today, Asian session. There was a gap down. Okay, yeah, cleaned up the chart. Right. Let's look at this area, right? Now, we've had this before. We've had gap ups and gap downs previously. So let me just explain what has happened here. Let's look at on the 4-hour chart. Okay. So this was the market open. This is the first 4-hour candle of the market open. Price closed here on Friday. This was the candle close, and then opened here, right? And there is no candle in between them. So that's a gap. It's known as a gap. It closed here on Friday and opened here, right? I think that's about 450 pips. Yeah, that's a 450 pip gap. Okay. So imagine that there is a 450 pip bear candle. After this is a 450 pip bear candle coming down, right? Because that's an invisible candle. That's why it's called a gap, right? There's an invisible drop there. Price dropped. There's a it's a drop, but there's an invisible candle there. It's not an invisible drop. There is a drop, but there's an invisible candle, right? So some brokers, there are some brokers that will show you a bear candle here, right? A 450 pip candle coming down, because they will fill in that data and they'll show you that candle. But on IC markets, it doesn't. It gives you raw data from their liquidity provider. So you don't see the candle because the market closed here on Friday and opened here with a 450 pip gap. Now, visualize that there's a 450 pip bear candle just after this, and between these two is a bear candle coming down, right? So we have a drop, base, and a drop, okay? So we're going to mark that. Let's take a look at it on the 1-hour time frame. Let's probably go down to 30-minute. Yeah, so price has gone past it, right? This was the source, right? This was the source of supply. There's a 30-minute drop, base drop here. The reason this is a base in candle, let me zoom in, is because this candle has more collective wick than it has body, right? So there's a drop, base, and a drop. That's a clean drop, 2 candles pushing down. And then price has come, this is the close of the candle on Friday, and this is the open. So there is a base here because, as I said, there's an invisible candle here. There's a base, and then there's a bear candle here, right? So there's a rally, base, and a drop. That's the demands. I mean, that's the supply zone. Price has come through it, right? That's the source. This is a reaction. Again, this is the source, and this is the reaction, right? We created a supply zone, a 1-hour supply zone because of that drop, and price has come there and gone through it. Now we're going to take a look at this area because we seem to have supply here, and there is a BRN. I always say when price is going through a BRN or coming from one, you need to go down to the lower time frame. So we have a rally, a base, and a drop. Now I'm going to keep that there just to know where the source was, okay? That's the reason. I'm going to keep it there. I'm not going to bring this the end of this box here, because so that you guys know where the source, that's where the Sorry. That's where that's where supply was originated, right? And then there is a, a zone that was formed here. Price came back, went through that zone, and formed new supply, right? So let's put the numbers on that. That's 838, and this high is 548. Yeah, that's good. Okay, so now we have on the 30-minute time frame, there's a base there, but on the 1 hour, it's visible. You can see the rally and the drop. That is, I'm going to mark that as 1 hour supply, right? Because it's visible on the 1 hour, it's not visible on the 4 hour. It just looks a doji there, right? But on the 1 hour, it's clear. You can see a rally and a drop, and the base is visible on the 30-minute time frame. Okay. Further up, we have this large zone here, right? We have a drop, 1, 2, 3, 4, 5 basin candles and a drop. Let's take a look at that on the 1 hour again. Yeah, that's better, right? So that will be on the 1 hour, that's the rally. These are all basin candles, and then that's the clean drop there, right? So this is also part of the base. These are all candles that are side by side. You can just think of it as two bookends, and all of these are inside, right? Those two candles. So the numbers on that is 423. Okay. And that is, I'm going to get rid of this. That is 4-hour supply, right? Just save this. Okay. 30863135. Yeah, good. Okay, that's 4-hour supply. Right, so these are the two supply zones that we have. We have a 1-hour supply, we have a 4-hour supply, right? I'm not worried about price coming all the way up here. It's not going to move 1,000 pips today. Let's look at demand, right? Now, there is a drop, as I said, there's an invisible candle here. There's a drop, a bear candle in between this and this. That's a bear candle. And then the rally. So there's a drop and a rally. So which means there is supply there, right? We're going to go down to the 1-hour time frame, and we're going to look at it. Yeah. Yeah, on the 30-minute, it's clearer. There's a base there, right? Price has tapped 2979, rejected, pushed up. We have a drop, a base, and a rally. Now I want to see if this has a source at the further left. Let's look at the 1-hour time frame. Yeah. So you have a rally, a base, and a rally, right? And why are we looking at the 30-minute time frame? Because price is going through a weekly SR level. Whenever price goes through a BRN or a weekly SR level, a BRN is also known as, I call it a psychological round number, or a BRN, a big round number, or a weekly SR level. These are price levels. They are not zones. They are a specific price level, right? Whenever price goes through them or bounces off them, you need to look at the lower time frame to find the base, right? So here we have a clear 30-minute zone, a demand zone, rally, base, and a rally. And that's the source, right? Price is never random. It's never random, okay? So this low is 651, and that is where price reacted to in the Asian session at the market open this morning, okay? That's the zone it's so that's the source that we saw, and this is the reaction to it, okay? All right, so this is visible on the 1 hour. You can see the drop and the rally, so we're going to keep it on the 1 hour. H1 demand, okay? Then we have a zone here. I think it's a 4-hour zone. Yeah, that's a 4-hour zone, and that is 800 pips away. That's good enough for today. We're just going to extend this to the right. Just take a look at that on the 1 hour. Got to always do it whenever price crosses a BRN or a weekly SR level. You have to go down to the lower time frames. This is the one that we're considering. Let's have a look at it on the 30-minute time frame. Yeah, that's good on the. There is a zone there, but it's good on the 1 hour, the 4 hour. Yeah, on the 4 hour it's good. This closes 053. Yeah, that's good enough. Okay, done. Now, price is already at a weekly SR level here. Let's take a look at that area again. 3023. The daily time frame. Yeah, we're going to have to adjust this one. Let's keep it at 3017 for now. 3017. So I'm going to update this to 3017. Right, there we go. And now you can see how important that level is. You can see how many times on the 1 hour we've tapped that, on the 4 hour we're tapping that. This low 3017, yeah, 3017 or 3018, even 3018 should be good. 3018. Yeah, 3018 is better. Okay, so we're gonna update this weekly SR level to 3018. right? And I said this last week. When you have, I need to see 2 to 3 daily taps. So on the daily time frame, we have a clear tap there, right? A very important one. There is one here, there is one here. So that is why I updated it, right? The rest don't, the ones below don't, but the new ones tend to change, move up uh, by about 20 to 30 pips sometimes, right? 20, 30, sometimes even up to 50 pips, right? Anything between 10 to 50 pips, which means 10 to $50. Yeah, sorry, $1 to $5, right? $1 to $5 change. Um, okay, so 3018, 3018, yeah, good. Okay, now here at 3018, we have this demand that is going to should break below this. Price should break below this. There is a, yeah, there's a clear drop and a rally here. I'm going to keep it there. Three three zero open 913. Perfect. And that is also 1 hour demand. Okay. This is 4 hour demand. Okay. Next, we have a few new zones. We have one here. We have a new zone here and one here. So let's take a look at the most recent one and see if this is a high liquidity zone. Okay. So I probably have to go around 30 minutes. Has this taken out anything? No, it hasn't taken out anything. Yeah, there is nothing here, right? So this is not a high liquidity zone. Let's look at the one below, the demand zone below. Let's look at the 1 hour. Price has pushed up, taken out this supply. We had a rally, base, and a drop, the invisible candle, right? So this is a high liquidity zone. Let's mark this. Okay, that's a high liquidity zone. And then the one below, yes, so this one took out these highs. You can see this rally base drop was taken out by this. So this too is a high liquidity zone. Not sure why we hadn't marked it at the beginning of March, 13th of March. I think we drove it around probably 13th or 14th of March, some time back, almost a month back. Okay, now supply. Let's check if this is a high liquidity zone. Has it taken out anything coming down? We have this, we have a drop and a rally here, and price has tapped it, come down, broken these lows, this base here. There's a drop and a rally. So there is, from the 15-minute time frame, you should find a base there. So this is a high liquidity zone. Okay, done. I always wait for the first 15-minute candle to close, the NY candle to close, so we still have time, plenty of time for analysis. So these are the zones. Now the next thing is we're going to look for a high liquidity candle at these new zones, right? So let's look for one here, and then we're going to look for one further up here. All right, so here let's start at the 1 hour time frame. We're looking for the largest bearish candle. So there is a wick here. This is, I always say, when price taps a liquidity area and creates a big wick, that's a liquidity wick. So you got to pay attention to that, and that covers the entire zone as well. So we start with that. That's a good place to start when looking for a liquidity candle. Okay, let's go down to the 30-minute time frame. It's still that wick. Let's go to the 15-minute time frame, and now we have a candle. Start here. It's a 170 pip candle. Wow. These are 15-minute candles, 170 pips. It's probably 200 plus pips, 230. 189. Let's go down to the 5-minute time frame. '84. So all these candles are the similar size. Yeah, we'll have to stick with the 15-minute time frame. Yeah. $186. Yeah, this one. 490632. They're large candles. There's nothing you can do about it. Because we had a lot of volume. Okay. Further up, let's get rid of this. All right, on the 1 hour time frame, again, massive wick here, liquidity level, massive wick. So I'm gonna mark that area out. Let's go down to the 30-minute time frame. That's a very large zone. It's a 520 pip zone. Wow. Can we split this? No. No. That's a massive zone. $332 pips. This was Friday's move. $193, $226. Yeah, stick with that. It's very likely that there are two liquidity candles in here. It's a 500 plus pip zone. But I'm going to mark the, yeah, it's no point going to the 5-minute time frame. There's going to be too many candles to look at, too many large candles to look at. So, yeah, there's one here as well, 142 pip candle. Yeah. It's very obvious. 146, 95. 174. Let's keep this on the 15-minute time frame for now. We'll take a look at it later. 940690. Yeah. Okay, here there is nothing except for 3018, right? Let's look down at this demand level here. Um, we have a wick, a liquidity grab from this area, price pushed up. We're going to mark that wick. Let's go on 30-minute time frame. Still the same. 15-minute time frame. 199. Let's look at the 5-minute time frame. Yeah, so it's large candle, 230 pip, 5-minute candle. That one right there. That's a 5-minute candle. That's 233 pips. Sheesh. It's a lot of volume on gold. Okay. And further down, let's look left here on the 1 hour. It's a 200 pip zone. It's a 102 pip candle, 133 pip candle. Let's go on the 30-minute. 86, 102. Six, 70, 73. Let's go with this one. 809, 791. Okay, cool. Right. Let's take a quick look at what price has done in the Asian and London sessions. Let's go to the 15-minute time frame. Let me just save this. We are pushing down. We should come through this. We should come through this. But we can't take sells here because we have a weekly SR level 3018. And then we have this. It's 175 pips away. That's fine. Probably sells below this. Clean space to the left, sells below this for now. Okay. Let's look at the 50-minute time frame. Where did market open? Market opened here. The open price is 2992. That's where the market opened. Three. Five. Yeah, so this is the Asian low, Asian high, London high, London low. Just give me a second. I'll be back in a minute. Okay. Okay. So the marker open here. Okay, the first 15-minute candle has closed. Let's take a quick look at what's happening right now. We've rejected the London high. We've rejected the London high. We've formed 30-minute resistance inside of this at the liquidity candle. Yeah, we can take sells. Let's take a look at this. Yeah, there we go. If price pulls back up here to the liquidity area, just to the liquidity candle, I'll be willing to take sells. Stop loss will be quite wide, but we'll be willing to take sells. I'm going to place the pending order here. 632. Yeah. So I've placed a pending order, sell order, just at the liquidity candle low. I'll place one higher as well, somewhere here at the optimal entry, 47, and I'll explain why. Okay, so the reason for this is we have Asian low that was created. Price opened here, came, tapped 2979, that's a weekly SR level, and pushed up. We rejected 2979, pushed up, created a liquidity candle on the way up, and pushed straight up, right? Past 3000, past 3018 to 3050. And the reason for that is because there was a gap down. So usually when there's a gap down in the same session, price pushes up, not always, but it does sometimes push up to fill that gap. And that's exactly what price did. But the trend is down, right? We are in a downtrend. We've seen on the weekly and the daily, and then also on the kind of the 4-hour, we are in a downtrend. Also on the 1-hour, we are ranging, but weekly, daily, 4-hour, we are in a downtrend. Now, price came here. Let's go to the 15-minute. We rejected 3050, pushed down back to 3018. On the way down, the price pushed down. We rejected 3018, pushed back up, created the London high, and came back to 3018. Then we created the London low, and we pushed back up to the London high. We rejected the London high inside pre-NY hours and created 30-minute resistance. And that's a tradable 30-minute candle, right? That's inside 1400 hours IC market server time. That's a perfect candle. And we've created resistance, right? And it's a tradable candle. So we should be coming down to 3018 and possibly towards 3014, right? 3018, 3014. So if we get an entry here, that should be about a 180 pip drop to 3018. Okay, and we should go through this to 3000 eventually, right? So this is so the stop loss is going to be kind of wide at the beginning because the candles are such, right? So I've always said reduce your risk when you're taking a wider stop loss. You're going to have to take wider stop loss because now the 15-minute candles are no longer. Look at that candle. That's a 63 pip candle, right? The previous candle was a 104 pip candle. The candle before that was a 75 pip candle. 5-minute candles and 15-minute candles have increased in size due to volume, due to a lot of volume, right? So I'm waiting for an entry here. I don't want to chase price and get in somewhere here. If price comes up here, then I'll enter and then look to get out here and then further down here. I hope that was clear. Any questions to anything that any questions with anything what I've discussed so far? Please drop a message in the chat and I'll do my best to answer. So again, I'm waiting for entries here. Price is also below the EMAs. Uh, we've got clean space to the left under this support, under all of this support here. But we can get an entry here because that is a liquidity candle there. That is a high liquidity zone. That is a liquidity candle, and it's been tapped. Yeah, it was tapped in the London session. So it doesn't need to come back up, in fact. It does not need to come back up. That's a good... Yeah, it doesn't need to come back up. Maybe I should have taken an entry here. We've tapped the liquidity candle inside the London session. All right, that's the London high there. This liquidity candle has been tapped. So it doesn't need to come back up here, but let's see. Let's see. Because I don't want to get in here. This is too far away. That's a 250 pip stop loss, and it's too wide. I'm going to wait for price to break this 30-minute high, this current 30-minute high. This 30-minute candle is closing in 8 minutes. I'm going to wait for price to break this high. It's very likely going to break the high. The current candle is going to break its own high. If not, the next candle is going to break its high because this candle has no top wick, right? So possibly coming to, yeah. Yeah, there we go. We're going to break the high and I'm going to come up high. What's the current high? 3161. Here, we should break this high. Let's look at the 5-minute time frame. Yeah, we should come up here. 876. Yeah, so I've got an order here. I've got one order here at around 3038.86 and then 3042.47, right? Let's see if we push up to get to trigger them. We still haven't broken this high. This 30-minute high is possibly, it might break with the next candle and not the current candle. Because this candle is closing in 6 minutes. Maybe the next candle will break the high and come up. If it come up here, I'll take an entry. Thursday is going to be interesting. Let's see how I think by Tuesday, by Wednesday, end of day, we should know, we should have a clearer idea about high time frame direction if we don't range. If price doesn't range and it moves the way it's been moving last week, I mean Thursday, Friday last week, if it continues to move like that this week, then we should, by Wednesday end of day, we should know what the high time frame direction is for Thursday's trade, for Thursday's CPI trade. But if we start to range the next couple of days, like today, tomorrow, we start to range, then it's going to be tricky. It's going to be difficult to predict the high time frame direction for Thursday. But there is definitely volume in the market. It's just that the volume needs to also have direction. It's just not volume where price pushes down, 200 pips or 300 pips and then pushes back up the same, then, we don't have direction. We just have a lot of volume, but in a range. Okay, 5 minutes for the candle to close. I think 30-minute candle might close like this. Let's see if it can break its own high. Yeah, we have a bullish engulfing candle here, so we should be pushing up. We should be pushing up. Now the reason again I'm looking to take sells here is because we've rejected the London high, created 30-minute resistance, formed a 30-minute tradable bear candle, and the candle has closed, and I'm waiting for a pullback to getting on the sells to get out around 3018 and here and maybe even at 3000 if we run that much. I don't know whether we're going to run 300 pips, maybe not, but definitely around 3018. Yeah, so it's very likely this candle close a bearish candle and the next one breaks the high and pushes up, and that's when we're probably going to get entry. Now then we'll have to manage risk as well, uh, because we'll find a way. Once we get in, once we get triggered, then we'll think of how to manage risk. It's pointless thinking of how to manage risk now. Yeah, I'm still waiting. Yeah, this candle is 69 pips. There's definitely volume. There's definitely volume. We just have to be patient, wait for the pullback to take the cells to come down to 3018. It's just ranging since the big push, since the Asian session, since the market opened and then the Asian session pulled all the way back uh, and reacted to this 30-minute supply and 3050. We've just been ranging. 11 hours, almost 11 hours. It's going sideways. Yeah, I'm not doing anything until price comes up a bit more. It needs to break this high, otherwise I'm not taking a trade. And if it drops, if it continues to drop now, that's fine. I'll not take a trade because uh, the market, the candles are too big, right? For me to take a trade here and then hold a 200 pip drawdown, right? You want to be very, you want to be very careful with your entries when when zones are this big, right? This zone, that's a 170 pip zone, and that's just a 1 hour supply zone, and it's 170 pips. We usually have 4 hour supply zones that are 170 or 200 pips, right? And sometimes we have 4 hour supply zones that are 75 to 100 pips. So this, to have 1 hour zone that is 170 pips just tells you that there is a lot of volume in the market. The candles are much bigger than usual. So you have to wait for a better price always. At least that's how I trade. I'm going to wait for a better price. I'm not going to just chase, even though I know the price is very likely to come down to 3018. I'm not going to chase price. Yeah, so 30-minute candle closed with no top wick. We should be pushing up. That's when I'll be interested in looking for sells. Once you break the high. if we break the high. If we don't break the high and push straight down to 3018, then so be it. Yeah, we're coming up now. And once we break this low, we should push through, but we have a lot of wicks here. So we might come in here and push back up. Let's see. Let's see. It's a Monday. I'm not going to force a trade today. If price comes to my levels, I'll take a trade. If it doesn't, it's fine. It's got no problems with that. Yeah, and yeah, if it comes to my levels, I take a trade, and if price goes against me, then I'll manage risk. That's all there is to it. Yeah, I should break this low. We're coming down to break the low. Yeah, we broke the low. We're going to come down now. Now we're coming down. There's no pullback. Price didn't come up here. Oh, I needed price to come above this for an entry. We should be coming down to 3018 now. That's just how I trade. I just want that pullback. There are some traders who don't need a pullback. Just candle confirmation is enough to take a trade. That's fine too. There's nothing wrong with that. I just want always. I always look for a better entry. Always. Where is the best place that I could have entered the trade? Here we go. We're coming to 3018 just as we expected. Price is coming to 3018 with no pullback. There was no pullback. Price didn't even break the 30-minute high. The candle opened. This candle closed, this candle opened and pushed straight down. No pullback at all. You can see there is no top wick on this candle. And we tapped 3018. That's a trade. If you took the trade, good for you. It just wasn't it wasn't for me because there was no pullback. I always want to see a pullback, but the analysis is correct. The analysis is correct. That's what's important to remember. If you understood the analysis, right? That's what's important. That's where, as a trader, you should be spending most of your time on the analysis, not on trying to find an entry or or TPs or managing risk. All of that is good. All of that is important. But the most of your time, a lot of your time, a big part of your time or a chunk of your time has to go on the analysis, on your prep work. So we did the prep work. We found the liquidity candle. We found the London high, the London low, and we rejected the London high, formed 30-minute resistance inside of pre-NY hours. And then I said that price should come down. Since that's a tradable 30-minute candle, we should be coming down to 3018 and then to 3014, 3013, the London low, and that's where it's heading to now. But I just needed a pullback after this candle closed. I wanted price to pull back at least to this, somewhere here, to take the trade to come down. But there was no pullback. The candle closed, the next one opened and went straight down. If you did take the trade, then good job. But if you didn't, and if you are waiting, if you waited like me, then there's nothing wrong with that too, right? You just have to be more patient and wait for the next setup. There'll always be setups. The market will never run out of setups. We run out of patience, but the market never runs out of setups. You just have to be patient and wait. And if you don't get a trade today, then you might get one tomorrow. If you don't get one tomorrow, you might get one the day after. There is no liquidity candle here. So we should be going through, and this is not a high liquidity zone either. There is a weekly SR level running right through it, but there is no liquidity candle. I don't see a liquidity candle here. On the 5-minute, yeah, there is nothing. There's just this big wick from the top, rejection from the top. There is this candle. That's a liquidity candle, 118 pip, but that's been tapped already. We've come to the bottom of that. This low is 588. This low is also 588. So we've come to the bottom of that, and we've broken that now. We've broken below 588. So we should be going right through, straight to the London low. But I can't take an entry without a pullback. There are many days that I miss trades, right? And that's because I have certain rules, and when those conditions are not filled or not met, then I don't take a trade, and that's okay because those same conditions they keep me out of bad trades, and sometimes they keep me out of good trades too, right? And I don't know beforehand whether it's going to be a bad trade or a good trade. I just have seen in the long run, over a long period of time, over many years, that the conditions have kept my capital safe. That's what I've realized. So that's good enough for me. It's kept my capital safe and it's kept me profitable. So sometimes on days like this, those same conditions that I would use any other day would keep me away from a positive RR trade, right? If I had taken the breakout, that was a 134 pip move. It should be coming down to The London low, that's 180 pips, and we should be coming down further down to 3000, which is 300 pips, right? But that's okay. Those same conditions will eventually, if I follow them, if I'm careful to follow them every day, they'll keep me away from possibly bad trades too. See, there is no 15-minute high break. We just pushed down. We broke the low, came down. This one pulled back a bit, but never broke the high. It stayed under the previous high and then broke the low. This broke the low. So we're creating on the 50-minute time frame. It's very clear. We're creating lower lows and lower highs. Lower low, lower high. Lower low, lower high. Lower low, lower high. Lower low, lower high. There is no pullback. There was no pullback at all. NY session opened and straight down 167 pips. We're coming to the London low. We should tap this pretty easily. 3014. We're almost there. 3014.9. We should get there pretty easily. There is volume. So that's a 155 pip 15-minute candle. 3 minutes more for the candle to close. We should go through this zone. We should go through this zone pretty easily. And then it's just clean space after that. So a 400 pip candle should drop easily to 3000. What's happening here? Got a 5-minute candle push up with no top wick. Let's see if we can come past this 30-minute high. Might get a chance to enter a trade again. Yeah, this candle, 1 hour candle has no top wick. That's the same 30-minute candle that opened at 1500 hours IC market server time, 3161. So we should be breaking, we should come above that. If we do, I might consider taking sells. Even though price has come to 3018, I might consider taking sells if we do come up. For price to continue down to the London low. We should be coming above this 3161. Just put a price level there, 3161, 3161. That's where I'm looking at. If we come above that, I might look to take sells to come back down here to the London low. But price could come deep in, and we'll have to manage risk if it does. That is why I'm waiting for price to come further above this 3160, 3165 or 3161, basically above 31.61. If we come above that, then let's see how the 30-minute candle closes as well. I'm going to wait for the 30-minute candle to close. I'm not going to, let's see, I might, if we spike up, then I might just take a trade. As I said, I'm not going to force a trade today. It's a Monday. It's my eyes are on CPI and PPI this week, right? That's, as a trader, that's what you want to be kind of looking for. Here we go. We're coming up. We're coming up. We're going to break the high. Right? You got to be that's what you got to be thinking of. Like, what are the volume days? Where can I capitalize on moves? Where will I get clean moves? Uh, to take a trade and get in and get out if I'm a session trader. We just broke the high, is that? Yeah. Yeah, we tapped 3161. We've broken the high. I'm going to take a trade here. I'm going to take a trade here. That's one. And I've got a few other trades opened up there. TP is 3018 and below. So this one, 3014. Yeah. I'm not taking any more trades here, just one position because the 30-minute candle is closing bullish. We're rejecting this area, so you got to be careful. Got to be careful. You shouldn't unnecessarily just open, uh, take a higher risk or take more positions because there's a 30-minute candle that's very likely about to close against you if you're trying to take sells or if you have taken sells, right? So you got to be careful. Wait. Uh, it would be better if you see a 15-minute bear candle close from here, a tap and close to take the sells to come back down. I've taken one here, but that's it. I'm not doing anything anymore. Now, we're going to look at how to manage risk, right? But before that, TP levels are 3014 or 3013, and then 303003. That's because we have 15-minute resistance here and 30-minute resistance right here. So you want to get out just above it, 3003, and then 2996. Okay. And then further down, if there's a lot of volume, which I doubt very much, at 2980, right? Now, how are we going to manage risk on this? If price, if a 15-minute candle closes above this resistance, right? So we have 3040.5, all right? Let's put a level there. Yeah, if a 15-minute candle closes above this, I'm going to close my trades. That means we're pushing up further. So there's no need to hold drawdown. You can, if you have a 15-minute bear candle close again, then you can take sells again. There is no need to hold drawdown above 3040.5, right? That's how we manage risk. 30-minute candle seems like it's closing a doji. Let's see. Yeah, we're coming further up. Coming further up. Should be coming further up. Coming into this clean space here. So if we get this, that's 170, that's 180 pips. To get this move here to 3014. But again, I've given TP levels. I've given several TP levels. Three's partial close positions. Where if you've taken a higher risk or more positions, then you can look to close at either 3014 or 3013. That's you can consider that as the same TP as one TP. A second at 3003. That's 100 pips away, 110 pips away, and then at 70 pips below that at 2996. So 30-minute candle closed. It's a bull candle. We're trying to push back up. We should be coming inside here. Now I've said what I'm going to do very clearly. If a 15-minute candle closes above here, above 3040.5, then I'm going to look to manage risk, right? That's what I'm going to do. And the reason for that is because you can see 15-minute candles struggle to close above 3040.5. We closed above, we closed back below, closed above, closed back below, right? So that's an important area, obviously. We closed below, closed above immediately. So whenever price closes above, it immediately closes back below, right? You can see we closed below, closed above, immediately closed back below 3040.5. We stayed under. We closed above, immediately closed back below. We closed above, immediately came down and tapped it and then closed below. and we stayed under, right? We stayed under. We couldn't close above. This one closed at 3040.4, right? We stayed under. So if we close above, then I'm going to close partial positions. Or if you I'm going to close probably one of my positions, because this one will get triggered too. I'll close probably one of them if we close above. And then if we close back below, then you can look to add back your position that you closed. Okay, that's how you manage risk. Yeah, it's the we got another 25 minutes to the NYSE open, so I'm going to be here for another maybe 25 minutes. Yeah, I'll be here for until NYSE open as usual. And then we'll see if in about in about 20 minutes from now, if I see if price is just going to range sideways here, then I'm not going to give any setups, or maybe I will. I don't know. Let's see. Let's wait for another 20-25 minutes to see where the 30-minute candle is likely to close. Right? Depending on where the 30-minute candle is likely to close, then I may give out a setup for later on for the next 2 to 2.5 hours of the NYSE session. Okay, I'll be back. So I've got these pending orders here. We are about, yeah, just not too far away from them, 30 pips away from them. I'll be back in a bit. Yeah, the 1 hour candle has closed a doji. So nothing, no information on that candle. The previous 1 hour candle is also doji. This is very important to notice. The previous 1 hour candle is a doji. The one before that is a doji. Both these candles on the 1 hour time frame offer no information at all, right? Both these candles. So the candle to consider is the one before that. That's a small body bull candle. Doesn't show a lot of bullish volume. It's a small body bull candle, right? So we could be pushing down. I might take another order here. Let's see if we push up. Yeah, take another one there. Yeah. It's about close to 300 pips if you get there. So I've taken two positions here, the same level, 30, just above 3031.61. The where I'd marked this price level, and I said price is going to come there, and it has done that. It's come there. We are reacting to that. Why 3031.61? I explained that, right? That was the 30-minute and the 1 hour candle high, right? That's exactly what it was. The 1 hour candle high and the 30-minute candle high, right? Above 3031.61. That's why we had it marked there. I've taken two entries there. One order I'm waiting for. I'm going to get out at. I've got partial positions at 3014. That's about 180 pips, 175 pips. and the next one is about 300 pips, 290 to 300 pips. Okay, I'll be back in a few minutes, maybe 2-3 minutes, maybe 5 minutes. Okay, still waiting. It's 15 minutes, about 20 minutes to the NYSE open. So price is likely ranging. We've seen that before on the streams. Price is likely ranging until NYSE open, and then we might have volume come and a continuation. So there are two things that happens. I've spoken about this several times, but I'll bring it up again. Uh, in the NY, with the NY Open, if you have a volume push, um, price can ideally price usually does one of two things if there is a lot of volume, right? It ranges, um, and then you have a continuation in NYSE or a reversal. Unlikely that we are going to have a reversal today because there is no news event, right? Um, and when I say reversal, I just mean a session reversal. I don't mean like we're suddenly going to go bullish now, and price is going to retrace all the way up. That's not what I mean. I mean for the session we might have a reversal. So we might have a price, if price is going down, it could Sorry, just give me a second. Yeah. So price can the stream says there's something wrong with my audio. I hope you guys can hear me. I hope it's audible and you guys can hear everything I'm saying. Okay, so anyway, what I was saying is if you have like in this example, if you have a push down, price could range and then a continuation. And what I mean by continuation is we continue that move down. Sometimes price can okay, thanks Philip. If um, if price is pushing down, we could have a range until NYSE open, and then price reverses back up, right? Now the opposite of that also obviously can happen. If price is going up, it can range and then a continuation to push, continue to push up, or we range and then push down, right? Either one of those two things happen usually 80% of the time, 75% of the time I would say, with the NY and NYSE opens, right? That's what happens, because usually once you have that move, unless there's a lot of volume like you had on Thursday, Friday, where you just have price just a lot of volume in a single direction, right? So on Thursday you had a lot of volume coming, and price continued down, right? Let's go to Thursday. Right. So we had a lot of volume coming and price continued down. Okay. This was NY open and we continued down, and then later on we continued to push straight back up, right? Uh, and on Friday, same thing. We had a lot of volume coming and then we continued to push down. Okay. Sometimes what happens is price can push down, then we can range and then go the opposite way. Or it can be a reversal with the NYSE open volume, or a continuation with the NYSE open volume, a continuation of the NY open direction, right? That's one possibility, or a reversal of the NY open direction, right? Now we got to be a bit careful here because we have a liquidity grab of a liquidity level 3018, right? 3018 we've identified as a liquidity area. Prices tapped here the daily once, daily twice, daily three times. Three times we've tapped 1, 2, 3 daily candles, 3018, right? So we have tapped here very clearly on the 30-minute time frame. That's a liquidity wick. It's 117 pip wick, so we're going to be careful, right? So we're going to manage risk on this trade. If price, and I've said exactly how I'm going to manage this, if a 15-minute candle closes above 3040.5, I'm going to close both these positions that I've opened below here, right? But if it doesn't and we continue down, then partial positions 3014 or 3013 and then 3003. So we got a 15-minute back candle that's closed, but no real direction because that has equal wick at the bottom and equal wick at the top. So we could easily push below, break the low, and then continue up to break the high. That's possible. If you look at the 5-minute, yeah, also no clear direction because this candle has no top wick, so price can break the low, come back up and break the high, and then continue higher. So we're still ranging. We're very much ranging with no clear direction of where price is to head. Where price is heading, right? No clear direction yet. We're ranging just like we've been ranging for 11 hours now. All right, look at that. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 hours. And this is the 12th hour, and we're still ranging. We're still stuck inside this 200 pip range. That's a 200 pip range. If you look at only the bodies, from here to here, that's to exactly 200 pip. That's a 200 pip range. We're still struggling. We've taken sells at the kind of at the top of the range, not exactly at the top, but at least very close to the top of those bodies. That's about 40 pips from the bodies is where we've taken the sells, and we're anticipating price to come back to 3018 and then 3014, 3013. Let's see if we can get there. We still have quite a bit of still have about 100 pips before we get there. Okay, so I'm going to wait another 5 minutes. Let's see how this. Let's wait another. There's another 13 minutes, 12 and a half minutes for this 30-minute candle to close. So let's wait another 10 minutes before I decide to give out any trade ideas for the next 2 to 3 hours. Yeah, we're still trying to reject this area and push back up. Hmm. Yeah, see, we're pushing back up. Anyway. Okay, so let me just recap what we've done, and then I will give out a trade idea for the next couple of hours. The reason we've taken sells here, or I've taken sells here, is 30-minute resistance formed. It rejected the London high, formed 30-minute resistance inside of pre-NY hours. That's a tradable 30-minute candle, bearish candle that has closed. Price didn't pull back here, so I didn't get in the trade, but it pulled back later on, and I took a trade just above this 30-minute candle high. I've got entries up here and up here. How I manage risk, because once the trade is active, the first thing that you got to think about is how are you going to manage risk on the trade if price goes in drawdown. If your trade goes in drawdown, how are you going to manage risk? So how I'm going to manage risk on this is there's a 3040.5. If a 15-minute candle closes above that, then I'm going to close everything and probably call it a day, or later on I'll check if there's another 15-minute candle close below 3050, maybe look to take sells to come back down again, right? In terms of TPs for this trade idea, for this signal, I mean for this the trade that I've taken is 3014, 3013, 3003, and then 2996. Now, the trade idea for the next 9:30 a.m. next 2 hours to 2.5 hours, 2 to 2.5 hours, within a 2-hour period or a 2.5-hour period, the trade idea are buys, right? So if price comes down to a liquidity area, 3000, we've already tapped 3018. So further down, if it comes to 3000 or this liquidity candle, so there's one here, two, three, 2979, three liquidity areas, very close to each other, right? If it comes here, wait for 30 minutes support to form, a 30-minute tradable bull candle to close, take the buy and wait for the pullback and the buys to go up, right? If we form at the liquidity candle, then the safer stop loss is always under the liquidity candle, which is under this low, which is below 2972.28, and your TP levels would be back at the liquidity areas of 3018, and then further up here around 3035, 3018, 3035, right? Those are buys. For sells, if these sells don't work out and price pushes further up, again, wait for 30-minute resistance to form, a 30-minute bear candle, tradable bear candle to close, and then the pullback and take the sells to come down. Again, TP levels 3018, 3013, 3003, 2996. Okay? Those are the two ideas, sells and buys. Buys are at these liquidity areas, 3000, the liquidity candle, or 2979. If these sells don't work and price comes through, price goes right through or closes above this closes above this resistance. If a 15-minute candle closes above 3040, that means these cells are very unlikely to work and price is going further up. Then wait for 30-minute resistance to form, either back in the liquidity candle or 3050 or 3057, any one of those three liquidity areas. Wait for a 30-minute tradable back candle to close. Wait for the pull, take the pull, wait for price to pull back a bit, and then take the sells to come down, right? Again, your TP levels, same, 3018, 3013, 3003, 2996. Okay, those are the ideas for the next 2 to 2.5 hours. Okay, 6 minutes for the candle to close. Let's see if you're going to close a bear candle. If you close a bear candle, that'll be great. Then we can maybe pull back and continue down. We form resistance again. But if you don't, then we're heading up. If you don't close 30-minute resistance here, if you go up and close a bull candle, then we're heading further up, much higher, right? That's where you need to think of managing risk. So if this candle closes a bull candle, what I'm going to do is, soon as price breaks, the next candle breaks this high, I'm going to close, right? So which means I'll lose, instead of losing about 70, 80, or even 90 to 100 pips, I'll lose probably 20 pips, right? That's how we manage risk. Always think of how to manage risk to keep so that you can keep your losses smaller and your wins big. So I'll be here for another 5 minutes for the candle to close. And when the candle closes, I'll end the stream. And then I'll be back tomorrow, 7:30 a.m. EST, and we'll do the same thing that we usually do our prep work, and see if we have any opportunities for the NY Open. Yeah, we're still trying to push up. We're rejecting this area, trying to push back up. Yeah, trying to push back up. I'm going to wait for the 30-minute candle to close. And what we're going to do is bring the stop loss above this candle high now. 3034.06. Yeah. Once we break this high, very likely I'm going to close both positions. Because once you break the 30-minute high, this current high, this candle breaks its own high, or the next candle breaks this high, that means we're coming up. We're coming further up, right? And then there is no reason, there's absolutely no need to hold drawdown, right? Why hold when you can get out at 20 pips, right? Take a 20 pip loss. Why try to take a 100 pip loss? Makes no sense. So that's why I've got my stop loss at 3034.06. Once you break that high, I'm getting out of these positions. Okay. I hope that's clear. I hope the trade that the analysis was clear today. I hope the trade idea that I've taken is clear. Where where I plan to manage risk, or where I plan to get out of the trade is very clear, and the TP levels are very clear, and the trade ideas that I've given for the next 2 to 2.5 hours is also very clear. Okay, 2.5 minutes more. Let's see. I think we're pushing up. Yeah, it's 40 pips. We should be pushing up. A minute and a half. Okay, so we're forming 30-minute resistance again. That's a good sign. So I'm going to manage risk up here, 3040.5, right? I might close one position. If you break above this candle high, I might close one, but I'll close everything if a 15-minute candle closes above 3040.5. Okay, right. So I hope that's clear how I'm going to manage risk on this trade and how I'm going to close the trade. I hope that's very clear, because that's ideally what you should be doing also. You should be always looking to manage risk if price goes in drawdown. Okay, that's the most important thing. Once you take a trade, that's the first thing that you should be considering, how to lose less than your initial risk. All right, be back tomorrow 7:30 a.m. EST. We'll do the analysis and we'll see if you have any opportunities for the NY Open. All right, take care, stay safe, don't overtrade, don't over risk. It's a Monday, right? You should be thinking of Thursday, Friday. Your eyes should be on Thursday and Friday, maybe even Wednesday, Thursday, Friday, or just Thursday, Friday. That's where you should be thinking of, right? Every day, as I always say, every day is not a trading day. Every day is not a day that you need to be opening trades and closing trades and try to make gains. That's not how trading works, right? Look at the calendar. Look at where you might have where the possibility of clean volume uh, could be present, clean volume. So it's very likely Thursday, Friday, because you've got CPI and PPI probably during those days. You might have clean volume, right? So that's what you need to be you're doing. Don't try to overtrade, over risk today. It's just a Monday. All right. See you tomorrow, 7:30 a.m. EST. Take care.